Hi everyone, it's Grant Abbott speaking, and welcome to, this is now my fourth session on investment strategies. The first one was in September of 2019, around about 5 or 6 months ago, where the Commissioner issued 17,700 letters to trustees and also their auditors. No administrators, no advisors or accountants, just essentially trustees and also auditors, bypassing the administration function, which was quite a big step. And at that stage, I said, is this the new norm? Are we moving into a new framework in terms of the ATO and its relationship with advisors? And I would say after we go through today's investment strategy guidelines, it is a resounding yes. In 2015, I believe I called the top of the SMSF market saying, this is as good as it's going to get. We had wide open slather in terms of borrowing, what we could invest in. So there's a lot of opportunities coming down the horizon. And then, of course, we had that fateful May budget in 2016 when Treasurer and now Prime Minister Scott Morrison introduced a whole raft of changes for self-managed super funds, including obviously the $1.6 million T-bar. And that they put everyone on the hop. And now what we've got is a ever-increasing, fairly aggressive Australian Taxation Office and Commissioner of Taxation that is really focusing in on this area. And I remember when I did my first webinar on this, I had quite a bit of, not that I did anything, I just simply said, look, this is what it is. This is what we've got to look at. And I got, obviously, there's a lot of negative comments, not towards me, but more importantly, from a lot of people saying, well, why do we need to do this? It's just an absolute joke, obviously complaining. And look, it only relates to those people who've got LRBAs, so on and so forth. Well, and I called it, I can tell you, I remember saying around about December when I had a reprise of this investment strategy, that this, and you've heard me say this will be rolled out to every one of the 600,000 plus self-managed superannuation funds, mark my words. And on the 17th of February, only a few days ago, the Commissioner updated guidance for trustees. Now, this is not for auditors. This is not for administrators. This is not for advisors. This is going directly to the trustees. They updated, upgraded, and really turbo boosted the investment strategy section on the ATO website. What we want to do today is obviously have a look at what is required there. Now, I predicted this a while ago and have updated our investment strategy requirements to include separate copy, tailored copy for those of you who have cash or got clients with cash or equities or property, anything with more than 75% concentration in one particular asset class. And we'll go through and have a look at the Commissioner's guidelines, but obviously classifies this as quite significant concentration risk, and it needs to be looked at in terms of the investment strategy. We'll go through and I'll show you how I've handled this in terms of the LightYear Docs strategy automation, and which is now up to around about, I think about 10 billion possibilities. I love it when people say, can you just send me a sample investment strategy? Well, that's not going to work because there's unlimited possibilities even just with ours, because we also include derivatives risk statement, which is required if you're doing CFDs, and also for that matter, if you're doing an LRBA, you need to put that in place as well. Anything with leverage, you need to have a derivatives risk statement, which we've encompassed in our LightYear Docs strategy automation. Also, just put in place reserves. And as I said, if you've got more than 75% concentration risk in any particular asset class, we've also allocated tailored copy for that. And you'll also see when we go through, it's absolutely imperative that within the investment strategy document, and we've had this out for a while, that also names the members of the fund, their ages, their benefit status, and whether they've got insurances or not. Again, these are just requirements that are now popping up from the Commissioner. So we've got a pretty open book. Let's go through, look at that. We'll have a look at also the issues of what happens if we fail to meet that. Particularly now, I would have thought we're right in the middle of auditing season. And this is going to scare the life out of auditors. And we'll cover there. Sorry about the typo there on benefit down below, but I only just finished these slides a little while ago because I've updated a data capture and also investment strategy letter for you guys to use sending out to your clients. I think it's absolutely crucial. You have no other choice but to put every one of your clients on notice in terms of investment strategies. Because if they don't get over the line with this year's audit and expect auditors to take an increasingly tougher stance in terms of investment strategies, if they don't get over the line and there's a qualification report going to the taxation office, then the ATO is in its right to charge a $4,200 fine per trustee. So if you've got a corporate trustee, that's only one $4,200 fine. But if you've got mum and dad in there, then that's $4,200 each, and that is payable personally. It cannot come out of the superannuation fund. There is no reimbursement arrangements allowed in relation to those fines and penalties. So therefore, the client is going to have to wear it themselves. If they are not in a pension stage or a lump sum stage, or they've got obviously unrestricted non-preserved benefits, then they're going to have to pay it out of their own pocket as individuals. And of course, you guys don't get out of it. We're going to be looking at Section 54C. We're going to also have a look at Section 55(3). So we need to set a parameter of what is and what is not an investment strategy. And I'm not going to look at that. I'm going to have a look at what the Commissioner said. As I said, when I first started this webinar, in fact, I'm using these slides were the original slides I used in September, and I've had to go over the whole thing and change them completely because the Commissioner now is obviously going beyond the 17,700 and up to the whole 600,000 comport of self-managed super funds. Now, why is he doing that? Well, from my perspective, it doesn't matter. I look at what's in front of me at that stage. And so we need to look at the 2019, I'm going to cover that, the 2019 investment strategy for our clients. We're also going to have to look at the 2020 investment strategy for our clients. So we want to actually be doing two investment strategies in one, if that is possible. Importantly, for those funds which have already been signed off by auditors and lodged with the ATO, you probably need, if you do not believe it fits within the categories required by the Commissioner, you'll need to go and do a deed of rectification, deed of ratification. A deed of rectification is a simple way of saying what we have lodged or what we have on file is no longer appropriate and now needs to be rectified and also ratified so the trustee actually takes that into play. So we're going to look at the ATO guidance. We're going to look at where you guys fit in. Look at what a template versus a tailored solution is. A template is simply where we have like a one-pager or a two-pager or a three-pager that really a lot of the words are stock standard. There's no changing. And in particular, the typical old templates that I've always argued were never an investment strategy where we had 0% to 100% across a whole range of asset classes has now been confirmed by the Commissioner of Taxation that that is not an investment strategy, which as this is now a confirmation by the Commissioner in relation to what an investment strategy has been since the 1st of July, 1994. So let me say that again. This is now confirmation of what investment strategies have really been in terms of the issue of them by trustees of the fund since the 1st of July, 1994. We may have exposure for prior investment strategies, particularly in the case, as I said before, if you have got clients with 0 to 100%, if you're involved in that, you better get your move on and make sure that you at least put in place investment strategies from the last 4 years, at least to cover that position to what we call effectively do a deed of rectification for it to go back and write over the top of those investment strategies. Because essentially at that stage, if you've been using these, they are not investment strategies according to the Commissioner, which leaves you exposed as the administrator of the account. Now, a lot of people come to me and said, well, where do we fit in? The Commissioner actually looks at the guidelines around that. We'll focus in on that. But more importantly, I've just completed and consolidated our investment strategy letter to update beyond the Commissioner's original guidelines by the investment strategy letter for you to send out to your clients with data capture. And I'd like to spend a good 5 minutes on that because that's a great tool, first off, to notify your clients that there's a change in guard in terms of SMSFs and compliance around the Commissioner of Taxation. And believe it or not, this is investment strategy, but is going to go on down the track. So don't expect that this is the last foray by the Commissioner of Compliance. SMSFs are going to get harder. Morrison started it. The tax office now are really going to trustees and really starting to hammer those. So we've got to be careful around SMSFs. They're not the be-all and end-all that they were a few years ago, which you can see my segue into succession, asset protection, and also estate planning is a good measured solution to open up the boundaries and say SMSFs are just one portion of the overall structure for really good asset protection, succession, and estate planning, retirement income growth as well. So we need to ensure that our solution covers reserves, derivatives, member profile, benefit stage, cash flow, borrowing, insurances, and much more. And we'll see that when we get down to our automation. As I said before, what is a strategy? A strategy, if we go and have a look at the Oxford Dictionary, is a plan or course of action to achieve a certain goal. When we have a look at an investment strategy, it's a plan or forward course of action to meet the fund's investment objective. And again, the Commissioner basically has said that. So we don't need to have an investment objective. We need to have the fund's objective. What is the purpose of the fund? And then, for example, if it's to maximise the retirement incomes of all the members of the fund, then effectively we need to have an investment strategy, a plan of action, a course of action that meets that. So that if we're now stuck in the 2019 income year, the 2019 compliance audit, I want to cover that a little bit later on and show you how you can make it a forward-looking document even though you are doing it at the moment. As I said, unfortunately, a forward-looking document is what is required. If you're doing an investment strategy now that is going to carry back to the income year starting the 1st of July 2018 and ending 30 June 2019, then you've got serious problems. So the downside of everything, I just want to cover in here just quickly. Because an investment strategy is incorporated under the fund's governing rules, if it's not covered under the trustee of the fund, we find that section 52B to F, which is for investment strategies, and 52B to G, which is for prudentially managed reserve strategies, are both imported into the governing rules of the fund. They're like the one area where the superannuation law actually adds on or lays over the top of the trustee, and virtually the laws say that this investment strategy requirement and the reserves requirement are now have the full force of the SIS Act. Now, the danger about that, and I'm not going to go into the legislation because I have done that before, but section 54C, for those of you, in fact, anyone who's doing advice, you want to start reading these sections. The only way you're going to really get on top of this is to read, understand, and apply the law. So 54C says that no person, and it doesn't say trustee, it doesn't say auditor, it says no person can breach the governing rules of the superannuation fund. So you've heard me in the past, when we do an SMSF will or a binding death benefit nomination, a pension, a reversionary pension, etc., we can't breach those governing rules. And effectively, the investment strategy is the same thing. So the danger about it is, first off, if I've written an investment strategy or had a hand in saying to a client, this is an investment strategy and it rates from 0 to 100%, then effectively where I've got is that is not an investment strategy, as we will see. Therefore, me as a person, and this goes down to the individual, you'll see in Holloway's case, Holloway versus FCT, in that stage, an accountant was personally pinged for a breach of the SIS Act. So it applies to individuals there. And more importantly, Section 55, this is the key issue for us all to understand. If we as advisors or auditors or anyone has been involved in a breach of the SIS Act, which includes now obviously the governing rules and particularly investment strategy, then if there is a loss on any, in this instance, any investments, for example, if there is no investment strategy and there's investments made by the trustee of the fund, the auditor and the administrator have signed off that this is an investment strategy, then if the client loses money as a consequence of the underlying investments, then what we will do from that perspective is they've got full right of recourse under a strict liability. This is not negligence. There's no contributory negligence. Effectively, the trustees and the members can recompense or basically sue the advisor or the auditor for any loss or damages. So it's very dangerous. Carl Rayner, thank you very much for the question, and today's slides will be coming out for download for you, along with the sample letter that I'm going to show you a little bit later on, and also along with a replay of this video. This is absolutely crucial. As I said before, if we've got an XY ETF that's fallen price by 20% and there's a $50,000 loss, if there is no investment strategy or the investment falls outside the fund's investment strategy, for example, it's 0 to 100%, 0 to 100%, then effectively the planner, accountant, auditor are on the hook. So let's go out, and I'll just bounce out of here quickly. And what we're going to do is I want to take us to the ATO guidelines. You'll see this. I've got the ATO guidelines. I'll send you a link here. Notice here on the page, this is the Australian Government Taxation Office. I'll just blow it up a little bit further. This is a direct session to SMSFs. It's to trustees of an SMSF. So it's not to accountants, not to auditors, not to advisors or administrators, it's directly to the trustee. Now, they've got a lovely little video there, but then what they've got is this is the new and latest updated issue around investment strategy. So I will send you this link on the email coming out so you can have a look at it. But what I've done, just so I can mark it up, I've just simply downloaded the copy there the Commissioner's put in, and then I'm going to go through that there. So this is just straight off the page, but it's just enabled me to highlight for your specific perspective. So you can see here there's a whole lot of issues that are going to be covered, but we've got here what needs to be included in my SMSF's investment strategy. First off, your SMSF investment strategy should be in writing. Now, there's been in the case, the Commission's been a bit wishy-washy and said it should be in writing, but it doesn't necessarily have to be. Now we're starting to get some really firm, strong edges around exactly what is and is not an investment strategy. If your client hasn't got an investment strategy in writing, they're exposed, but more importantly, you are exposed as well. And if there's an auditor signed off that, then they are well and truly exposed and open for a Section 54C/55(3) loss recovery. And more importantly here, if we go down, it should also be tailored and specific to the relevant circumstances of your fund. So I think I've had a look at a number of templates which are available there. They just take a lot of work. You'll see when we get to the LightYear Docs strategy automation, effectively what we've done is we've got more than 1 billion possibilities in there, and really it's not a tailored, it's a tailored automation, certainly not a template. So here's a big one that we haven't seen before, and I'm very lucky we put that into our session, into our system a while ago. So relevant circumstances may include, but are not limited to personal circumstances of the members, such as their age, employment status, and retirement needs, which influences their risk and appetite. In particular, and he just goes down and goes through the laws, so I'm not going to really cover that particular issue there. Now, when formulating your investment strategy, and again, remember, this is going straight to the trustee, it is not a valid approach to merely specify investment ranges of 0 to 100% for each class of investment. You also need to articulate how you plan to invest your super, why you require broad ranges to achieve your investment. As I said, to go to 0 to 100% for each class, that is absolutely inexplicable. Now, the percentage or dollar allocation of the fund's assets invested in each class of investment should support and reflect your articulated investment approach towards achieving your retirement goals. If you choose not to use allocated portions or percentages in your strategy, you should ensure material assets are listed in your investment strategy. You should also include the reasons why investing in those assets will achieve your goals. Now, that's one area if you start going in and talking about specific assets, that's where you may start to fall foul of the Corporations Act, such that you are being given financial advice. I've got another couple of questions here. If a fund is 90% invested in shares, very diversified across sectors, is this a problem? Absolutely. So if you're solely invested in shares, it's not an issue, as we'll see a little bit later on. But more importantly, what we need to do is cover why are we doing in that. And the same thing, it's not only that, it's also cash. So we've got here, does this mean this previous strategy minutes, rectification deeds, producers and signed off by trustees late last year and now redundant? No. So if you've used our system before, that also includes names, etc., then effectively you're A-OK. The only issue would be if we've got cash or like cash of more than 90% or equities more than 90%. That's the only difference. So I'll go through this, only minor changes, because we perceived that this was coming. So if you've already done it under LightYear Docs, you will be okay, particularly if you've done your deed of rectification, your deed of ratification, which I think is absolutely crucial. So are there any restrictions under the super laws? Well, I think, sole purpose test, we know that. So here we go to the asset class. So remember, the 17,700 letters went just solely to basically property. Now we've got this going to all trustees. Effectively, this is like a press release to each and every one trustee. Well, it's important for you to get on front of it and get out to the clients and saying, look, this is the way forward. And at least you've got two assets. You either help the client, or alternatively, if you don't help the client, they're there to give you an indemnity, which I'll show you in the letter, which I'm going to give to you for you to send out to your client. So while a trustee can choose to invest all their retirement savings in one asset or asset class, certain risks such as return, volatility and liquidity risk can be minimised if a trustee chooses to invest in a variety of assets. This is called a diversified portfolio, which helps to spread investment risk. Investing the predominant share of your retirement savings in one asset or asset class can lead to concentration risk. In this situation, your investment strategy should document that you considered the risks with a lack of diversification. So it doesn't say you can't do it. You can't, not invest all your monies in property or equities or cash. It just means that you've covered the risk. And I'll show you what we've done in our LightYear Docs situation. It should include how you still think the investment will meet your fund's investment objectives, including your fund's return and cash flow, which is important. Asset concentration risk is highlighted in highly leveraged funds where there's limited recourse borrowing. So that's obvious where there's, for example, forced asset sales, etc., and what happens there in terms of cash flow. So what does giving effect to my investment strategy mean? So this comes straight out of the legislation. The super laws require that as trustee, you must formulate and regularly review your fund's investment strategy. You must also give effect to investment strategy as regards the whole of fund circumstances. This means ensuring your fund's investments are in accordance with your investment strategy so you're on track to meet your retirement goals. To help meet this requirement, you should consider specifying appropriate allocations or percentages or dollar, I wouldn't go dollar ranges because they change all the time, for each class of investment ranges. So he's basically coming out. Remember, he was actually going in, and a lot of people said, if we have a look, I was just having a look at a question there from Graham. I'm not sure what you said about the ATO meaning must, but anyway, if we go through, we're expecting draft guidance, etc., from Commissioner, and this is it. So if we go down and we have a look, this means ensuring your funds are in accordance. However, a broad investment range between 0 to 100% and broad range of assets do not reflect proper considerations in satisfying the investment strategy requirements. Your strategy must articulate how you plan to invest your super in order to meet your retirement goals. So we don't consider, this is important because even if we do broad ranges of bands, which we'll go through and I'll show you how to do, the fact that we bounce out of those for a little while, he basically says it doesn't, if it's only a short-term change to the asset allocations or we bounce out of them, it's not a variation to the investment strategy. So I think that's a huge win for us because that's always an issue that I've been looking at. Obviously, we need to do a brand new investment strategy where there's a market correction, when a new member joins the fund or departs the fund, when it commences a pension. Plus, you should also review your strategy at least annually and document that you have undertaken this review and any decisions made arising from the review. For example, you could do this as part of an annual trustee meeting minutes. You should then provide these minutes or other evidence of review to your auditor. So from my perspective, you'll see when we go through the automation, it's not a bad idea just simply to reposition and change that investment strategy for each year. The one I'm going to show you will actually cover you for 2019 and 2020. So what is my auditor's role? So this is the big one. I'll just blow it up. So they're going to check your SMSF has an investment strategy in place for a relevant financial year. Your fund's investments were in accordance with the investment strategy, and your strategy had been reviewed at some stage. Now, if they don't believe it, then the auditor is going to lodge a contravention report. Now, if it's not compliant, then we've got down here, have a look at that a little bit later on, but potentially there, if the breach is not rectified, then it's a penalty of $4,200. So again, that rectification idea that we're talking about, that deed of rectification, fits squarely within there. So let's just bounce out of there. So that's the ATO ruling. I've got a couple of questions from Craig. Grant, we prepare a lot of SOAs through our financial planning department for SMSFs, provided these cover the areas you have identified. Does a separate investment strategy need to be prepared? Absolutely. An SOA is not an investment strategy because an SOA covers members' information. An investment strategy is a trustee requirement, so you would be exposed there. From Penny, haven't seen you for a while. Given the recent discussions around abolishing return of excess franking credits, is it probably wise for an investment strategy holding percentage in shares to avoid mentioning this? Yeah, look, I think, look, at the moment you could rely on great returns in terms of your franking credits. It doesn't hurt to put that in play, but just again, be mindful that potentially all of these are essentially risks. So the risk that you're losing franking absolutely could be there. So what we've got there is, if you go to the LightYear site, I haven't put it up there, but you'll see up on LightYear's site, I'm logged in as an LY strategist, and I've got the support centre here. So over in the support centre, you'll see we have a whole range of information. Unfortunately, I was supposed to be doing our Wills and Testamentary Trust relaunch today, but because this is so important, I've delayed that for next week. You'll see there's a lot of will and testamentary trust letter and data capture, enduring power of attorney and indemnity letter and data capture. We've got the protector. If you haven't seen that, make sure you go and have a look at our videos around that. It's absolutely crucial. To me, it's the most exciting strategy I've seen for like decades. And that includes all my experience in SMSFs. It's far better than the SMSF, and it's available now on the LightYear Docs site. You'll see down here, client letters. We've got investment strategy, trustee questionnaire, investment strategy review. These are about to be replaced by the following. So I'll send this letter out for you and we'll have a look. So this letter may be used. We go through some of the criteria there, but I just want to actually talk to you about the letter we'll go through, and then we'll go through the LightYear Docs site. Tim Munro, go the protector, absolutely. So thank you very much, Tim, for all your guidance on that relation. So this is a Word doc, so you can change. I've just simply come and put my understanding where things are going, where I'm here really, we don't work directly with clients. We work through advisors such as yourself. So I'm writing this in order to provide protection to you as advisors. So from my perspective, this letter for all your clients, whether you've got 100, 200, 3, 4, 500, you need to send this letter out to your clients to at least put them on notice. Even if they're already doing really great investment strategies, it doesn't hurt to go through this process. Just simply tailor it and say, look, we've completed this, but at least let people know. So the Commissioner of Taxation blitz on super fund investment strategies, absolutely. So we knew that started in September, and now it's been really ramped up. So the Commissioner of Taxation has recently written to a number of our clients regarding the self-managed super fund investment strategy. This action for the Commissioner of Taxation has been followed up with a guidance note to trustees of SMSF, such as yourself, on what is required for the trustees to comply with the investment strategy requirements under the super laws. Importantly, he notes, an investment strategy must be in writing and reviewed annually, ready for sign-off by the fund's auditor. So we got that straight out of the guidance. An investment strategy must look at the members of the fund, their ages, superannuation benefit requirements such as pensions, and plan a strategy to meet their retirement income requirements. absolutely. I'll just put a little full stop there. If there is primarily one asset class, such as property or equities or cash, then the trustee must provide commentary on how that asset class meets the needs of the members. Again, this just comes straight out of that guideline. If there's borrowing, how the trustee is to coverage leverage risk, which would also apply to derivatives, must be accompanied by a derivatives risk statement. So that's just taking a little bit further. Now, this is something you get, in fact, if you wanted to, you could almost highlight for your client. Importantly, the trustee must have an updated investment strategy that meets the new guidelines for the income years ending 30 June 2019 and also the year ending 30 June 2020. The Commission notes if the auditor of the fund qualifies the fund's investment strategy, there is a $4,200 fine for each trustee individually. So you might want to highlight that, at least it's putting them on notice. Now, to ensure your fund meets, I don't know why I put apostrophe there, these upgraded and updated guidelines, we suggest a three-step process. One, complete the attached, and I'll show you, data capture showing what asset classes your fund intends to invest in and broadly what percentages to allow for rise and fall in asset prices. Because prices go up and down, that's why the Commission says do bands or proportions. For example, this may be 10 to 30% in cash or 60% to 90% in equities and managed funds. If you're unsure of what to do, please contact us and we can help you in the preparation of the fund's updated investment strategy from scratch. So the way I would do that, get them in for appointment, look at last year's or the year before's underlying investments, look at the bands, and then start building that with the help of the LightYear Docs strategy automation. Secondly, if they don't want to do that, then do the data capture, forward it to us. We'll look at all the circumstances of the fund. So you're going to put in the ages, names, etc. of the members' ages and super benefits, plus other investment strategy requirements, and complete the trust investment strategy for your review. Thirdly, review the investment strategy by the trustee of the fund and sign off using the trustee minutes, which will be attached to the final investment strategy. So they'll send the data in. Your role there is simply to complete that investment strategy as per their instructions, and then you'll send it to them in final for their review. If they're happy, then they will sign off as trustees, and effectively you'll be moving on. Then you'll give that investment strategy is going to be reviewed by the fund's auditor to sign off for compliance purposes. To be transparent, all auditors have been put on notice of the upgraded ATO requirements for SMSF investment strategies. Now, the above will take some time, but we can do 2 income years in one. So that's 30 June 2019 and 30 June 2020. I've got a question from Glenn. Would you need to be licensed? Certainly, if they do all the data capture, you're just doing a form fill or an automation fill. No, you don't need to be licensed. The Commission does talk about licensing in there, but that's when you actually get down to specific investments. Preparing an investment strategy for a trustee of the fund, you don't need to be licensed in my view. But again, I would say, the smart thing to do is get them to do the data capture or get them in and have a meeting and complete it in front of them. Now, if you want to do it from scratch by interviewing, so you get them in for an appointment, then the charge is, I've just put $550, you can put whatever you want. However, if you complete the data capture, enabling us to correlate this information with fund member details, a lower fee of such and such will be charged. So all you're doing is you're correlating the automation and building it out for the client. Then they still have to review it and sign it off. It's important to complete this task immediately, give the fund's audit requirements and the Commissioner's spotlight and increased audit emphasis on investment strategy. Now, here's the big one. And I'm just going to highlight this. Alternatively, you could produce the fund's investment strategy having regard to all of the above factors and following a review of the ATO SMSF investment strategy requirements as published on the ATO website. In this case, we take no responsibility for advice to the trustee in respect of the fund's investment strategy and are thus indemnified from any recourse against possible penalties or fines of $4,200 per trustee. So what you're doing there is if they want to do it themselves, which is fine, then effectively you're getting an indemnification there from them. Now we then go down to the data capture, and then again there's a full explanation. Here's a little bit more hardcore of what the Commissioner sent in a guideline beforehand. So I don't know why that's. I'll make sure that all this is fixed up beforehand. And certainly Ash at our team will do that. So please complete the following table. We go through the explanation there, and then we go through all these asset classes. So cash, what are you going to put in there? So, they might come in 10 to 30%. Now, if that's the case, then effectively they've now provided you with all the relevant asset classes sitting in there. So if we have a look, we've got domestic cash, international cash, domestic fixed interest. You can see here bonds, infrastructure bonds, international fixed interest, domestic equities, international equities. We've got domestic property, international property, alternatives, borrowing, etc. So what I'm going to do is just a couple of things. I'm involved here. You'll see here. Next week, I'm doing a strategy session for Australian Solar Investments Limited, which is a company that currently is raising money for doing small-scale solar power stations for communities and also businesses. So they're offering ordinary shares and also redeemable preference shares with a coupon rate of 7% per annum. So make sure, if you can, come along to that. I'll send through a link next week. I forget when the date is, but it'll be a really good session. I'm going to have a look at it in terms of using the 7% redeemables, how that would fit in terms of investment strategies, and more importantly, have a look at how it essentially would fund underlying investment income, particularly if we end up losing franked dividends coming out down the track. The big thing we need is obviously cash flow. So I'm bouncing out of there. I'm just going to go to LightYear. As you can see there, I've got my LightYear Docs. I'm an LY strategist, which gives me CPD, so on and so forth. So what I'm going to do there is I'm just going to have a look. In fact, I don't think I've done one. I'm going to start right from the start, and I'm going to look at my product categories. So that will now take me down. I could either do investment strategy in the search, or I'll look at SMSF, establish, maintain, and upgrade. So you can see there's lots of stuff around self-managed. I would say at this stage, probably only about 20% of our strategy automations and documentations relate to SMSFs. Sorry, there's a large that relate to SMSFs, but our uptake, our volume is more along the trust, the bloodline trust, the lineage trust, companies, so on and so forth. But when I have a look here, I'm going to look at the investment strategy for the fund. As you can see there, if you just want to purchase this, it's $49. I think it's $49. If you are on an LY strategist or LY firm, effectively there's no cost. You can see here, from my perspective, I just simply need to start the document. I've got a couple of other questions. Good one from Bridget. Good to see you on board there, Bridget. Does the fund have to have a LightYear deed to use your investment strategy? No, mainly because you'll find that our investment strategy is based on the law. And remember, 52B2F actually imports that section of the legislation into any deed. So effectively, you can use any deed and still use investment strategy. So that's a really good question, Bridget, as I would expect from one of my best pupils. Damien, again, I'm sure this is going to be a good one. Do you think it would be okay to give a client an asset allocation report to assist with ranges prepared through our software? Absolutely. So that's not a bad idea. If you give what you've got at the moment and say, look, this is what you've got, an asset allocation report, but then get them do that questionnaire, and then from that perspective. I mean, at the end of the day, I'm going to take you into this. If some of you are worried about concern, if you want, and we have had a number of individual trustees, simply give them the link to the LightYear Docs site, the investment strategy for the fund, get them to pay the $49, and then you're basically off and running. So I'm going to put this into Grant Test. You'll see when it gets green, I've got there. So this is going to start. Usually, it might take a while. Well, no, it's not, because there you go. My internet is pretty fast. If it, depending on the use, but this system can handle up to 1 million documents an hour. Just for those of you who have a quick look around, we've got a few things. Save answers on the way, because quite often you might get to the stage, you go and have a cup of coffee, leave this open. You'll find when you get to finalise the document that it basically is timed out. So save them on the way. And if you save them on the way, you can always go back to them. See where it says My In Progress Docs? So if I got there, you can go in and have a look at, these are all the documents that I've started, leading member discretionary trust. So I can go back and I can change that. Importantly, our LightYear Docs, if we go in here, and I've got here my vault. So if I go in here, have a look at Grant Test, you will see the last document that pops up there. Oh, actually, it's not there because I haven't finished it because it's in progress. But once I finish it, it will pop up in the vault. But I can go back at any point in time. So if I have a look at Grant's investment strategy in there, or SMSF loan agreement, which was in December, you can see I can relaunch. You can actually go back 6 months, recorrect or relaunch a document, particularly if you've got pensions to be advised. Now let's go through. I'm going to put this, because this is in Grant's test, I want to give it a name. So whenever I go into my vault, I know what it is. So I'm going to put Grant Feb 20. How's that? Gee, I didn't think about that. It's February the 20th, 2020. So what an auspicious set of numbers there. 02 20 20 20. For those of you who like numerology, that's an awesome set of numbers to go and get yourself a lottery ticket. But if we all do, who knows what's happened there. But it's going to be a magical day. You'll see here, document branding. We've got white labeling there for anyone who is our LY strategist or is on a subscription or our license. Otherwise, you can use the Abbott-Family logo there. Or if you don't put anything there, effectively there is no logo. So we just go down. What's the name of the fund? We just fill in the Smith Family Super Fund. We're just in the process at this point in time of going through integrating with BGL. So that will be very shortly. CAS 360 is this week. We then move on to Class and BGL Simple Super. So that will be useful for all of you to pull through things. So when we have a look, should investment strategy make specific reference if an investment administration platforms are being used rather than only direct holdings? I would actually, Chris, that's a really good question. I would still go through, for example, if I've got a REIT, like a property trust, I would still put that in property rather than managed fund. The same thing if I've got a wrap account, I would go through and pull apart my asset allocations there. Otherwise, I would be concerned. And thank you for your little play thing there, Bridget, in terms of your numbers. So on what date was the fund established? So that's pretty important. So 01, 02, say 2013. So what is the current date of the current income year? So I'm going to do here, I want to show you what I want to do. So 30 June, because we want to do two. So I'm doing the investment strategy essentially for the year ending 30 June 2020. But I'm also going to do 2019. I'm going to show you how to do that. So this is all embedded. That's what I'm saying is there's billions and billions of possibilities here. It's all tailored. So if I do this, now I'm going to pop up a 2020, but I'm going to show you what else I want to do. Now, would you like to have a customized investment objective? So if you go yes, then you can write in your investment objective if you want to get a certain rate of return. I know Brian Wibberley does a lot with rural properties, so he has his own investment objective there for the clients. If not, this is what your investment objective is, which is the trustee advised investment strategy seeks to maximise the fund's members' retirement benefits, including income streams and lump sums. So it's pretty general, which is essentially the purpose of the fund is for retirement income, and hence we're maximising returns. So all our investments should be along that purpose. Has the trustee of the fund received diversification letter? Now, if you go yes, then effectively, and you must complete all these fields, otherwise it leaves a blank. If you go yes, then what happens is a separate tailored paragraph detailing the diversification letter is embedded into the investment strategy. Again, it's just a little bell and whistle, but it's an important one to say, hold on, we have received this from Commissioner, we have thought about what we're doing, and the investment strategy follows along there. So we'll assume there's no. Now, do you want to rectify and ratify an investment strategy? Now, I said it's a forward-looking document. What's the date of deed ratification? Unknown, because I don't know when the client comes in, but let's say the client's coming in tomorrow, then I'll choose that. And remember, the one thing is you can leave this blank, because remember, the first thing you're setting it to the client in a draft form. You've said that. They have a look over it, review it, and then they can come back in the office or they can sign it. When they sign it, you go back and relaunch. Remember, I showed you how to relaunch. You relaunch, put all the dates in, and then you're off and running. So what's the date of the previous income years? So the first one we're going to do is 30/06/2019. So what I've done there is I'm actually making for 2 years in one. Now, what I'm doing is I know that the investment strategy has to be in place for the 1st of July 2018 if I'm doing my current compliance. Well, what I'm doing is this is a deed of rectification saying, look, I haven't put it in place for that time, but I'm now putting it in place for that time. If I want, I can actually add extra ones. So if I do press tab button there, I might say, oh my God, I had, the 0 to 100% in 2018. Oh my God. I also had it also for 30 June 2017. So I'm now rectifying those. Again, just be careful that when you do asset allocations, it does have that particular aspect. Otherwise, what you can do is you can just go back and do a deed of rectification for prior years anyway, if you're concerned if there was a different asset allocation. But again, please feel free. You see down here, the bottom button, there's a support. So when you do a support, up will pump your name, you put in your email address. You might say, look, Grant, we've done this. What can you do? That then goes to our support centre. We'll get advice on it. So we put in the name, as I said before, Smith nominees. We put in there 1, 2, 3. We then go down to our registered office. As I said before, with our link to Cash 360, it's certainly going to be a lot easier for us at a later stage to just import a lot of that stuff. So we've got company directors. I'm going to put in 2 there. In fact, what I'll do is I'll put 3 in there, and you'll see why shortly. So I've got 3. I've got John Smith. Now, these are the people you can see on the right-hand side who's actually going to sign this. And that's important. And then we've got Matthew Smith, their son. So we click on, we want all the directors to sign. Now, if there was a breach or a qualification report, these guys don't get personally pinged. It's just the trustee. Now, if it was individual trustees, each one of these would be up for a potential $4,200 fine. Okay, so now we're having the trustee meeting. Remember, this goes to draft. Now, what they're doing is they're going to adopt the investment strategy. We don't know, but what we've said is, okay, it's going to happen tomorrow. I already know the address where the trustee meeting is going to be held, so I can go select, put that up there, saves me having to rewrite it again, and up it goes. Now, here's the chairman or chairperson, sorry. So we can do John Smith. Now, I can go there, or I can go up to the left. So how many members are in the fund which we're going to do investment strategy for? So we've got 3. Does the trustee for the fund maintain reserves? So let's say that we've got reserves in there, because I know there's a few of you looking on. Now, when we've got our reserves, they have to be prudentially managed. So it's very unlikely, because reserves are going to be called upon in emergencies. We generally want to make sure they're cash or equities. So they have their own separate. So here I've chosen cash for reserves. If you don't have reserves, then you go no. But if you do, see how that pops up. So I can choose what gets embedded into the document, what doesn't. Now, I've got 3 members sitting in there, and that's covered under the investment strategy and insurances. So I go to the first member. So what I've got there is I know who it is. It's John Smith. What's his name? Remember, this comes straight out of the Commissioner's guidance. We need to look at each and every member. So he is 63. Does he have a pension? Absolutely. If he hasn't got a pension, he's 63, we don't. Does he have an insurance policy, existing one? No. And so will the member have an insurance policy for the investment strategy period? No. Now we then go to add another, and we've got Sally Smith. So that's his younger wife. So she's 53. Does she have a pension? No. So if she doesn't have a pension, that cash requirement, cash liabilities isn't coming. But she does have insurance, and she's also going to have insurance for the current period. Now, we've also got Matthew Smith, who's their son, and he's age 35. Does he have a pension? No. Yes, insurance. Yes, it's going to be current. Now we move on to the asset allocations. You can see there, we put in, no need to add percentage, we simply put in X-Y. So for domestic cash, I'm going to put in, let's say we've got at least a 10 to 30%. So I'm trying to give a benchmark. And remember, if I sell an asset and it goes suddenly to 80% cash, but I'm then going to go and reinvest that into a similar asset class if it's equities, then what I would do, I can cover myself from the Commissioner's guidance note. But if I'm selling all my equities to go to cash, then I've got 10 to 30 here, then I am going to have to sit back and say, well, hold on, I'm really fully in cash. Now, does the fund hold, see up here, hold more than 75? We've got no. And if it does, a separate thing would come up. And I'm going to have a look at this a little bit later on. Anything in international cash? No. Fixed interest strategy. Now, remember the 7% redeemable press we talked from solar investments on their solar farms. We can put there in because that's actually a fixed interest style investment, but it's still equity. So I would probably, it's up to you guys, I would probably go 0 there, 0 there. And then when I come around to equities, I might say, look, we are going to go 75% or more into domestic equities. And we might say it is going to be anywhere between 20 to 80% is in equities. Remember, a couple of you asked about if it's more than 100, how we would cover that. So we'd put that in there. Property, does the fund have, I'd go no, because I've chosen equities. We can if we wanted to. If we went to property, then we choose residential, commercial, industrial, or retail, and we start to do that. But I'm going to have 0% property, 0% international equity. If you want, go and have a look at some of our past investment strategy webinars on property. They're very instructive. What I'm doing now is I'm looking at the other universe of people who've got mainly cash and equities, what happens there. An alternative strategy, we might have, for example, we might have something 0. I came across another one to 10% in futures. So I could put in futures contracts. Now, if I do that, and if I've got an LRBA, I need to click this. See this button? Does the fund have any derivatives or assets over which there's a charge? That includes LRBAs, friends. So you must put in place a derivative statement. If you haven't in the past, go back and do your deed rectification. Borrowing strategy. Look, I haven't borrowed to invest in there, so there's a 0 borrowing strategy. Other assets. Now, if you want to, you can customize as many asset classes as you want. So, for example, we might put in there gold. And then this just writes it directly. So, trustee is holding a gold for a long-term hedge. What's the trustee time frame? We can simply say 10 to 20 years. What's the asset allocation? We might just simply go anywhere between 10 to 30%. Sorry, 10 to 30%. So that then covers me there. And if you've got separate things, it doesn't hurt. For example, I could put in there Australian Solar, redeemable preference shares, put in there. This is not a bad idea. If you've done SOAs around specific assets, it's not bad to do custom strategies in here and putting in all your key characteristics in there. And if I want to add like another, I can just keep on doing that. So that's the end of my document. So what I do now is I can go and, as I said, Grant was very naughty. He should have saved the answers along the way. I can go and have a look at a document preview if I want. If you're one of our licensees, so you can go back and relaunch, you don't really need to do this. You're better off just going in and having a look. But there's our investment strategy. You'll see there's a guidance statement, which also covers portfolio, concentration risk, the legislation, the 5 steps to doing an investment strategy. So that's crucial. So that goes out to your client as well. So they're going to read that. Then we have a trustee meeting, but let's go in and have a look at that. So back to the interview, and I'm finished. So this will now pop out as a PDF, which is important. So PDF will come out and it will either have your logo or whatever you put on the logo or blank. This can come out as a draft and then you send this off to the client, the first step, then you come back and mix it. So I pop it up here. We've got it as a investment strategy. There's the guidance statement. So that's the preparation by you of the guidance statement. It goes through all the issues, investment objectives, looks through ATO guidelines, the 5 steps doing investment strategy, building a portfolio, asset allocation, and a lot of this is taken from ASX. So it's not a bad idea, particularly for those clients who've got equities. So this is the trustee meeting. So you're going to send this out in a blanked in a draft form. It's got the name, you've got all the trustees, you've got the directors there, the adoption of the investment strategy. So essentially we're going to cease the fund's former investment strategy that we've got there. We're then going to adopt the current investment strategy, and it's going to be kept on file for the benefit of the members of the fund. So we then sign off for the directors, and once it's signed off, then the investment strategy. Now we get down to the gutsy thing, which is the two things. Remember, I did a deed rectification ratification. So there's the 3 years I've done it for: 30 June 2019, 2018, and also 2017. Now, mind you, the asset classes that I'm putting into the investment strategy will also have to correlate with what was going on there as well. You can open up your broader bands, like 10, 20 or 30% to cover it. Otherwise, you might need to just go back and do an investment strategy for that particular year with a deed of ratification. So effectively go there. We've got 2019, 2018, 2017. I just didn't put, you can see wherever you got something like that, it means there's part of the interview that I didn't complete, which obviously was the trust. So I need to go back and effectively I would relaunch and complete that prior to sending out. So I've got the deed of rectification. We've got all the directors signing off. Now we're getting the investment strategy. So the first up is we're going to have a look at our investment objective. Remember, I had that before. So if you put your tailored investment objective in there, that's where it would pop up there. But we're using the standard one. Remember, we went, no, we don't want to customize it. Now, we've got to put the member name and superannuation interest. So we've got John Smith, pension, Sally Smith, no, which means she's in accumulation, and Matthew Smith, no. We've got their ages there and who's got insurance policies as well, and that will pop up a little bit later on. So we go through the background, the investment strategy, which really follows from the Commissioner's guidance, so that really if they have a look at this, this is just a restating of the law and also follows on from the guidance. So if the client's not going to look at 52B2F, but what they'll do is if they do look at the ATO guideline, they'll then see this correlates with that itself. Now, asset allocation, we talk about that. So it's important. The issue of risk we've got in there. You can see here, the trustee of the fund, and this again correlates with what we just saw, the concentration risk, holds more than 75% of its portfolio in equities, as considered as aware that risks involved in holding a significant portion of its portfolio asset class. At this time, the trustee accepts the risks of poor returns and the depletion of capital, will monitor its position regularly if need be, diversified to other asset classes. Now, if you chose property, it gets into exactly the same sort of stuff the Commissioner looked at, is what happens if there's no tenants, there's a flood or something like that. So that's the risk, and all of this follows from the guidelines there. So you have to have a look at risks from inadequate diversification, the risk involved in making, holding, and realising the likely return for the fund's investment. So risk is really important, why it's right up front there. Borrowing to invest in assets. So there is no borrowing. So we haven't, we've covered investment strategy, but at this stage it's no there. So diversification to mitigate risk, we talk about there. We've got property, but importantly, the trustee understands investment markets move in different cycles, reflecting underlying strength of the economy, industry, so on. So again, the diversifying, we've covered that up previously. Now, cash flow, the trustee of the fund is liable for the payment of pensions as requested by pension members, but the fund has noted investment strategy. Investments held by the trustee of the pension have been specifically acquired. And if you have a look at that, solar investments, where you have a 7% return, that would be something similar. Cash is a bit dangerous in terms of if you've got like a 1.9% term deposit, but we've got a 63-year-old, we need to know that they're taking at least 4% minimum. And if you're up around about 80, 85 years old, where you've got 9% or 7%, you just got to be careful. Balancing risk returns, that's pretty obvious. Major asset classes. So remember, we've got cash of 10 to 30. And again, this could have been taken straight out of the client's data capture. International cash, domestic fixed interest, we chose there. 20 to 80% domestic equities if we wanted to choose an equity portfolio. As I said, redeemable prefs I would put in there, or you could actually put into a custom asset. Here we've got property 0, but I've got some alternatives. So I've got futures contracts there as well, 10 to 20%. And then the other one, I've got gold there, 10 to 30%. So that's, you'll see I can have like 15 customisables and then effectively they'll just simply pop at the end. We've got insurances in place, and you can see there's insurances covered in there for Sally and Matthew Smith. So they've had a look at insurances and they've decided to put that in. We've got the super funds reserve strategies, which fits in primarily to section 52B to G, because it needs to be prudentially managed. As a consequence of that, managed fund reserves, they've held cash there. Investment strategy review and monitoring, effectively that's got to be a regular basis, which again accords with the Commissioner's guidelines. And then we've got options or derivatives, so under SIS regulations 1314. So that would also include obviously LRBAs as well. So that sort of gives you a bit of a look. If we've got property investment, you see there might be property papers, research papers coming in. For those of you who've got SOAs for the clients, again, remember the investment strategies for the trustee. If you've done an SOA for a client, certainly don't feel bad about adding that as an addendum or as an appendix to the investment strategy. Anyway, I've sort of almost run over time. I just want to go back to the slides quickly before we finish up. As I said before, we want to make sure that we meet all those investment strategy guidelines. As I said, ours is a strategy automation, inserts different phrases in that. I can't just give you a straight investment strategy because there's more than, as you can see, a billion, or more than that, probably 100 billion different options there. Just be careful. If we do get a qualification from the auditor, then we are liable for 55.1 and 55.3. So it's probably pretty important to ensure that is the case, that we either get the client. As I said, it's only $49 per doc. You can get your client to go on and do it yourself. I would suggest a lot of you, if you're going to go in and do quite a lot of these for our clients, that if you're just administrator, go $5.95 a month LY firm, or $7.95 a month, which is a strategist, which gives you unlimited CPD and also tech support from me as well. Now, if I just go through here, what's coming up, just a couple of things and I'll answer questions. Next week, at 27th February, absolutely important. As I said, we're segueing a lot more into that succession, asset protection, estate planning. I'm going to be bringing out my new wills and testamentary trust option, which is awesome. Includes a basic will there that you can then do. I'm coming to Melbourne on the 2nd March that week. If you'd like to have a meeting, please just contact me at grant@ilovesmsf.com, or the easiest way, just go into, that support button on our site. Just press support. I'd like to have a meeting, so on and so forth. Look out, I'll send out the details of Solar Investments SMSF webinar. It's a great product, very all on renewables, but I'll leave that for you a bit later on. And our succession asset protection estate planning workshop is actually oversold. That's up on the Sunshine Coast on the 23rd and 24th, but we will be videotaping and that will be out for a special price. Also, as part of that, you'll get an accreditation as a succession asset protection and estate planning advisor. So it's a brand new field for us all to work in, and it's super exciting. So let me just go through. So from Rocco, how long before LightYear integrates with BGL 360 SMSF software? We're doing CAS 360 first off. The BGL, I would say that's going to be maybe 2 months, absolute maximum there, where you'll be able to push information in through from there. Eric C is my friend, so I've got to give Eric a call, so we'll do that. Mike Goot, have these changes affected the previous version of IS? Only really if the only things that I put in, Michael, that's different is been the ability, if you've got more than 75% cash, I've put in those extra fields in there, and also extra commentary, which really follows on now from the Commissioner's guidance. So you can go in, if you haven't got that, and if you're not issuing reserves, then the prior one is perfect. So essentially you really don't need to worry about that one. So that would be okay. So just let me get rid of this. So that would be a-okay from that one. With futures, do you need a borrowing strategy? No, but you do need a credit reserve strategy. If members, so Graham, both in pension accumulation, do you need to mention both? Not really. I think the main thing there is it's more importantly the pension side of things, in that you're looking at cash flow, which is absolutely crucial. Again, we had a look at Mike about this thing. Will there be a supermate integration in the future. Look, I'm not sure, Daniel, around that one. I only continue to see there's a huge leakage out of super concepts, and from that one as well. It might be worth your while having a look at if you're in Supermate, trying to give us a business case for it. But certainly for us, BGL and Class 360, BGL 360 is the first one, and then Class. So we will be looking at that a little bit later on. Anyway, that's enough for me. This will be, so what you're getting today is you'll be getting a updated, you'll be getting this webinar as a release. You're going to have a look at it a couple of times. I'll send you the link to the Commission's investment strategy. I'll also send you a link to the that new letter that I've sent out for you. Again, it's a doc, so you can complete it as you see fit, but I'd be sending it out to clients anyway. I think it's absolutely crucial to get on top of it. You don't want to get caught in 55.3. I'll send you a link to make sure you come along to the webinar for solar investments. It's a very, very exciting new opportunity. And also a link to acquire the videos of the 2-day 6-session asset planning and protection event, and also a link for the session for next week. Anyway, that's a lot of stuff that I'm going to get to, but hopefully I'm sure you got a lot out of today. I know there's a lot of people probably down at the SMSF Association. This stuff applies to us now. Remember, it applies from the 1st of July 1994. So we have to cover first off 2019, 2020. Might as well cover 2 years there. And if you want, go back and use your deed rectification to even look at some of the ones in the past, which would absolutely be crucial. And look, if you're exposed, just get rid of that exposure really quickly. You've got, or at least get an indemnity from the client. Anyway, thanks a lot for attending. Great to see. I will be doing some great sessions coming down the track with Tim Munro. We're going to look at some exciting things with change for GPS. We are doing some SOAs coming down the track around a lot of these issues. But at the moment, the thing that's right in front of us that's smacking us in the face is this investment strategy. Let's get on top of it and stay strategic.